Hello and welcome to another update video about Ethereum. Yeah, CPI data today. Already said yesterday that it might be quiet until we get the CPI report today at 8:30 Eastern time. So what is the market? What does the market expect? Only very briefly, because I already explained in the Bitcoin video. 3.3% year over year is the forecast, and 0.2% month over month, and core CPI 0.2% as well. So it's the first time in a long time that inflation is set to increase again. But it is all about, okay, what is now the actual going to be compared to the market expectation? And if it is higher than what the market expects, it's likely going to have a bearish impact, at least short term, to the crypto market. And if it's lower, then rather positive. If it's around 3.3, you will probably not see a lot other than a little bit of short term volatility, which is going to be probably meaningless. Okay, so the situation is still unchanged here on the chart. We have the situation that price topped in a wave 1 here in July, you know that, and we came down in this ABC structure. So the idea is A wave down, B wave up, C wave down in an ending diagonal. Could get one more low, okay? Could get one more low. That idea for me is leading at the moment until price can prove to us that a 5-wave move to the upside has occurred. That 5-wave move has not occurred yet. So we take a look at what do we need to see to assume that price has really put in a lasting low here on the 7th of August. So let's zoom in. I've sketched out in yellow what we need to see. So the bullish interpretation would be that price is forming a 5-wave move up, but one more high is clearly missing. We haven't got a 5-wave move. We have 3 waves, okay? This could be a 4 and the wave 5 is still missing. That wave 5 should reach ideally around about 1900, but the minimum expectation is that it goes above 1875, 1876. If we get that 5th wave without price breaking below 1850, and it did briefly break it and it's just doing it again, but if it's sustaining below that level, then it wouldn't be good. But if it's going up now, basically it would literally need to go up now, then it has a chance to create an impulse. And if it goes above 1875, we likely have an impulse. So impulsive development would give us a really, really good likelihood that price is bottomed on the 7th of August. If we get a sustained break below 1850, then we're just trying to do that right now, right? Then it could indicate that we are just working on a leading diagonal here to the upside. And because it could be a leading diagonal, it will lose reliability below 1850, because a diagonal structure is less reliable. It could then also be a correction. So basically what that means is below 1850, it will lose credibility and the probabilities for a direct move to the upside in a 5th wave will decrease. Again, it could still be a diagonal. Therefore, the break below 1850 is only a failure to create an impulse, but it still has a chance as a diagonal, and I would give it a chance all the way down to 1818, 1817. If that level breaks, I will take the yellow wave count off the chart. Basically, below 1850, first stage of warning. Below 1817, it's failed. And then it's going to continue with the white wave count, in my opinion. If it goes up, makes another high, then an ABC structure to the downside would provide the next good trade setup for higher. That would be the pullback that would typically follow. The thing is, to the downside here, to call this a wave C to the downside, at the moment, it's not coming down in an impulsive fashion. So I think the odds for higher are definitely there. I just need to see that 5th wave to confirm it. It's important to understand the relevant levels below which probabilities shift, and the Elliott wave gives them to us. This knowledge is very, very important. This knowledge is basically pure gold, because you know when the sentiment is shifting. At the moment, it's still holding, and it might not do much until CPI. So it's pretty much just consolidating. You could even argue that this is developing some kind of a small channel. This is, of course, a bit speculative. We don't really have enough touch points, but it might develop a bit of a channel here in which it's moving, and a breakout to the upside would be a first signal that things are turning around. But of course, we need to make sure that we have at the very least 2 touch points. 3 would be better, but it is very speculative. I actually take it off the chart again, but it's a bit of a channel. I think down here we have certainly enough touch points. Let's see, let's keep it on there just as a as a reference, but a break above it would be a first indication that we get this fifth wave. It would need to break above 1876 to confirm. So yeah, weakness, and you can see how important that fifth wave is, because you can see that ETH is just struggling with it, okay? And it's right, literally the bulls and the bears fighting for that 1850 level, which is so important. And the bulls trying to put in that fifth wave, the bears trying to fight them. Yeah, today, I think, again, CPI will be a catalyst and will probably decide this, even though we might not see massive volatility as a result for CPI, depending on what actually is going to be announced. You can still probably get an idea of that 1850 level, if it's going to break or not. So it's going to be interesting. I hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Thanks a lot for watching. Bye-bye.